GM and welcome back to the channel. In this video we're talking about strategy and the crypto strategy that I employ to maximize gains. If you enjoy this one, make sure you subscribe to the channel and drop me a comment down below. Now this strategy is called the Barbell Strategy. As you can see from Investopedia here, the Barbell Strategy explained for stock and bond investors, but we will be adapting this for crypto purposes. The Barbell Strategy is around investing in either super low risk and super high risk investments only, and leaving out anything in that kind of middle sector, the kind of medium risk and medium reward plays. So we're looking at the two extremities within the crypto space here. Now let's jump into this, see how we can apply it for crypto and make some serious gains like Arnold.
The greatest feeling you can get in a gym, or the most satisfying feeling you can get in the gym, is the pump.
So for those of you who don't go to the gym, this is a barbell, and essentially you can see on this we have the plates loaded in equal distribution between the safe and risky side of things. Now this can be adapted to suit your various needs, but what this strategy is about either investing in the low risk, maybe a lower reward spectrum, in order to protect your capital, ensure you do not get blown up. So in this case, you're looking at things like Bitcoin and ETH. And then to the right hand side, we have the high risk end of the spectrum. So looking at things like new coins, new narratives, AI, that kind of stuff, and things with very low market caps that could be major outperformers. So think of this as having the angel on your shoulder and a devil on the other one. You've got the inner degen and also the sensible side of things, and we plan the portfolio out according to those two ends of the spectrum. Now this version of the diagram makes it a little bit more conservative in ways. If you just look at the structure of the barbell plates there, it's highly loaded to the left-hand side. So if you were to bicep curl that, you're going to get a massive left arm and a small right arm. But this would be maybe going from slide 1, you've got 50-50 safe to risk. And then from this one, maybe 90-10 safe to risk. So this spells out to me, how aggressive do you want to be with this strategy? What kind of risk tolerance do you have? So this will depend on your personal situation, how much of a degen you are, and what kind of returns you're trying to get out of this market. If you're trying to play things more conservatively, maybe you're a retiree, this kind of 90-10 approach would be a lot more better than going 50-50 like someone who's 21 years of age and really wants to YOLO this. So the ratio of safe to risk assets that you want to put into this is totally up to you. And I'm not going to actually say the percentages that I try and work with. But as part of this strategy, what you got to think about is when are you going to rebalance it? Maybe rebalancing it during the bear market isn't the best strategy. Maybe you're building your portfolio for the bull market. So maybe 2024 onwards, you would look to do some form of regular rebalancing to ensure that you're not holding too many of the risk aspect of this spectrum, and you're trying to move some of those risky funds as they outperform into those more stable assets like Bitcoin and ETH to try and preserve your wealth. So let's just quickly talk through the motives behind this. So on the left-hand side, the safest assets out there, number one has to be Bitcoin. It has institutional bid behind it. You have countries also trying to use it as a legal tender. Doesn't get much safer than that. And also you have ETH as well, which is the smart contract layer for the internet. It's got a serious federation now built around it with all these L2s, which will only further strengthen ETH. And with its tokenomics upgrade, think the burn and all that staking that's going to go on, I think it's a very low risk strategy as well. So this is why TradFi are circling around those assets. So you may want to have the majority of your funds in those two assets, and that way you're not going to blow up your portfolio totally. But on the right hand side, in terms of risk, there's different ways to define risk here. So for me, I would say there's sometimes major divergences between the price of assets in crypto and the actual tech they've developed, the fundamentals, and how big you think they're going to be, because oftentimes there's a lot of alpha in these markets and things do seemingly just get mispriced for long periods of time before the markets wake up to those things. So that's why I've got Kujira in there as a good example, like a $100 million market cap, a sovereign L1 over on Cosmos with a lot of things building on top of its own chain and a suite of native dApps all glued together by a mobile application. I think it will be a multi-billion-dollar cryptocurrency, and so I do think it's mispriced. So although it has a lower market cap, around 100 mil only, and that would be a low cap in terms of crypto standards, I think the potential of this one is rather huge. Now, this isn't to try and shill these various coins on screen, but just look at the thinking behind it. Then to the right of that, you have Libra Finance's logo there. So this is all about positioning into the risk of new trends, new narratives, and LSDFi is one of those that will capture significant value. So as the LSD market just increases and balloons over time, ETH staking rate at the moment is like 17%. Maybe that gets up to like 70% over the next 4 years. LSDFi, there's going to be some huge winners. So this is more about positioning some chips into these bets where the risk is high, but the rewards are also fantastically high as well. So I kind of see that as you're almost taking on additional risk by not allocating into these markets where you can see when the money is going to flow and that huge returns are potentially going to happen. And then at the bottom of this one, a hilarious comment came in around this one, which is the DMT token on a video I made, asking me if I'm just going to start shilling shitcoins all the time. But this is part of the investment strategy. We're looking at new narratives. We're looking at things that aren't yet consensus, and that is Arbitrum L3s, these roll-up chains on Arbitrum, and the DMT network is one of the first over there on Arbitrum. So if you just think about it, if this is one of the first movers into the L3 environment, well, not that many people are aware of L3s at this point, but could this be a meta going into a new bull market? Potentially. So I placed some chips there because I think if it does perform, it's going to have a significant outperformance. So for each of the high risk plays, you're putting less money into these. And overall, maybe you don't want to structure this on a 50-50 ratio. Maybe you're going to go more conservative with 90-10. But here and there, you may be putting down a few $100 or a few $1,000, depending on your portfolio size, into these smaller caps and new narratives, because these are the areas where you will see 100x performers. Maybe your coins will not go 100x, but some of these key narratives will provide 100x's. Whereas Bitcoin to go to 100x or Ethereum to go to 100x from here, well, I'm sad to say at that point, we will all have currency like Zimbabwe, because that means the mass money printing really has got totally out of hand, and our day-to-day lives will probably be quite miserable at that point. So the idea here is you have these small riskier bets, and as they outperform, if they do, hopefully they will, because you do your due diligence, you do some research into these things. You're not just doing the monkey throwing a dart at a dartboard of crypto assets, but we've done some research and we say, look, there's a good probability that we could get the outperformers here, and as they do outperform, if they do get these face-melting rallies, we can move those profits into our less risky, our more safe assets, Bitcoin and ETH, and hoard those for the long run. Also, do take note, you probably want to write down price targets for your lower caps and your more high risky plays and take profits when they hit those targets. I was guilty of this in the last cycle of readjusting my targets because they were actually hit. This again is a surefire way to get wrecked. I can speak to that from personal experience. Now, final thing to mention in the middle there of the barbell, obviously there's nothing. That is where your hands would go if you're lifting. And this means you don't allocate to middle of the road bets. So for an example, an alt layer 1 with a multi-billion-dollar market cap, maybe something like Neo Protocol or something like Avalanche. For me personally, utilizing this strategy, I would overlook those kind of coins because yes, they could provide slightly more upside than the likes of Bitcoin or ETH, but also they might not. There's no guarantee that both those outperform Ethereum. And even if they do, they're unlikely to still provide like 50, 100x gains from here as the market caps are really high. So again, this is all about eliminating the middle portion of the risk spectrum and just going super safe and super risky. So one of the crypto OGs who utilizes this is Altcoin Psycho, a very good follow. And he says, anecdotally, I've seen more people make it with the barbell strategy than any other portfolio structure. And this is why he utilizes it himself. And let's not lie, gem hunting is super, super fun, and trying to find things that really do outperform, always well worth it. As with anything, huge risks and huge rewards in this industry. But I'm sure like most of you, if you're in this industry, you're willing to take the chance of a smaller allocation into an altcoin with a low market cap with the potential upside outperformance. So I'll leave you with this. I hope you enjoyed this one, and I hope you can see some of my strategy behind what I do and why I invest in things. And when some people say, look, you're shilling shitcoins in the comment section, well, it is part of a greater strategy, and it's not always too sexy to be talking about Bitcoin and ETH. I'll see you guys in the next one. Subscribe if you're new. Peace.